What's going on, everybody, and welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure that you please like this, make sure you please subscribe, make sure you hit that notification bell so you can be in the know every single time that I drop an episode. Today was a very, very eventful day for the stock market. And right now, the Nasdaq 100 is falling. QQQ is falling. SPY is falling. Will it continue to fall? And this is something that I really want us to take a look at. I think there's some potential opportunities out there that I think we need to tap into. But I'm just glad to be here tonight. Glad to be here. Glad to tap in with you all. If you could just give me a quick second to be able to share this out to the people on live, I will make sure that I will get right to it. Again, I always appreciate you all for being online. Appreciate you all for listening to the audio version. Please listen to me on all podcast platforms. That's very, very important to be able to continue to get this message out so people can be able to build wealth for themselves and really truly be able to trade for themselves. That's the number one objective at the end of the day. So let's get right into it. All right. Let's get right into it. I'm gonna share my screen with you all here. And we're gonna talk about what happened on today. So right now, the futures market is actually up right now. The S&P 500 is up right now after the market closed. The Nasdaq posted its worst day since 2022. Now, there's a bear market going on in 2022, so this tells you that today was a very, very bad day. But futures are up right now after a sharp tech sell-off that dragged down the Nasdaq 100 and the S&P 500. Now, the futures tied to the Dow Jones is up about 0.2%. S&P 500 futures are up 0.2%, and Nasdaq 100 futures are actually up 0.3%. There were some companies that reported earnings this evening. And after hours trading, Ford Motors shares tumbled about 10% after the company's second quarter earnings came in much lower than analysts had anticipated. That's not good. Chipotle added 3% after topping earnings expectations and revenue. This company is still growing as it saw higher traffic at its restaurants even after the stock split. The company is still growing. IWM and ServiceNow jumped about 2.4% and 7.1% respectively after beating expectations. So what happened today during trading? So Wednesday's trading session saw intense declines for the S&P 500 and the Nasdaq Composite, driven by disappointing quarterly reports from Alphabet and Tesla, which led other heavyweight tech stocks and artificial intelligence darlings like Nvidia and Microsoft to fall in sympathy. Both the broad market index and the tech heavy benchmark posted their worst session since 2022, while the Dow Jones Industrial Average shed roughly 504 points to end the day. Now, investors had been viewing the recent declines as a sign of an overdue correction in an overbought market, which is now seeing a rotation from mega cap tech into small cap tech stocks and more cyclical areas of the market. And we're going to look at that once I get into the charts. Now, this is what Young Yu Ma said. We do have a lot of uncertainty right now. Also, I would call it an air of skepticism in terms of what AI, artificial intelligence, can deliver in terms of profitability and productivity, at least in the near term. And the market right now is a very much in a show me state and wants to see this happen or see proof on a more accelerated time frame. Young Yu Ma, Chief Investment Officer for BMO Wealth Management, said on CNBC's Closing Bell. There are healthy areas of the market, such as cruise lines and U.S. infrastructure, Ma said. However, he added that mega cap technology names will still struggle for a while until they can regain their footing and have more proof come forward about their AI related results. Although some major tech names missed expectations this week, an overall positive earnings season so far is propping up investor enthusiasm. More than 25% of companies in the S&P 500 have reported their second quarter earnings. Thursday, we're going to see an additional slew of financial results from American Airlines, Northrop Grumman, Honeywell, and Hasbro, among several other companies. Jobless claims data and preliminary second quarter GDP data will also be released before market open. Now, I really want you to pay attention to what Young Yuma said. Young Yuma said that we do have a lot of uncertainty right now, and is saying that also I would call it an era of skepticism in terms of what AI can deliver in terms of profitability and productivity, at least in the near term, right? There's always going to be a situation to where the market is always trying to price something in. The market is always trying to attach a narrative to why the stock market is going up or why the stock market is going down. So people will say these things and say that, technology companies, they're just not doing enough on the AI side. They're not showing enough from an earnings perspective. They're not showing enough from a profitability perspective. And I'm just like, I don't buy that, right? That's not something that I buy in terms of why the market is coming down. The market could just be coming down because the market could just be wanting to take profit. Investors could say, hey, we've had several all-time highs that have occurred this year. The investors could just be saying, hey, we're trying to take profit. Now, let's go to this fear and greed index real quick. The fear and greed index is at 41. We are in fear. The previous close, we were at 55. A week ago, we were in greed. A month ago, we were in neutral. So now we're in fear. Okay. So now we're in a situation to where, okay, the market is now coming down, and it makes you more excited, or it makes you more apt to buy certain securities or certain stocks that you've been waiting on because they're now coming down. Because when we look at the stocks, okay, when we take the time to look at these stocks, you're going to see what I'm talking about when I say that, hey, we're coming down to some attractive levels in terms of where we want to buy. Now, before we get to the charts real quick, I'm really going to bless you all. I'm going to bless you all and go through with these charts. But before we get to these charts, I want to go over the economic data, the economic calendar. Now, the number one thing I want to pay attention to is Friday. And we can talk about tomorrow too, because tomorrow is definitely important. GDP. So we're going to see GDP for Q2 tomorrow, which is very, very important in terms of what the economy is doing. Now, the median forecast is 2.1%, and previously we had 1.4%. Now, it's a situation to where we want to see good GDP. I don't think we want to see GDP fall off of a cliff, because we don't want to see a situation to where the market is trying to price in negativity, recession, recessionary activity, things like that. I don't think the market wants to see that personally. I think the market wants to be around 2.1%. I don't think they want to be, heavy elevated. They definitely don't want to be down below it too significantly. They want to be around 2.1%, in my opinion. Now, Friday is the most important, in my opinion. We've got PCE, the personal consumptions expenditures, right? Okay, so we're talking about, inflation, because the Fed's been talking so much about inflation. PCE, that's the number one metric that the Fed is watching, and we needed to get closer to 2%. So year over year, the median forecast is 2.5%. We need to be around 2.5% or below. PCE index month over month, they're expecting 0.1%. Last month we had 0.00%. So we need to be around this area. Core PCE, that's stripping out food, that's stripping out energy, the volatile sectors of what we're talking about with inflation. We're expecting 0.2%. We need to be around here, right? Core PCE year over year, 2.6%. We need to be around that. So this is very, very important from an economic data perspective in terms of what I'm seeing, in terms of what could be affecting the market. Those are just a few things that I want you to pay attention to, and I want you to understand what's going on. The market's always going to be trying to price something in, trying to attach reasoning around why the market could be coming down when people could just be taking profit. That's a possibility. Now, like I said, I'm gonna bless you all, and it's time to go. It's time to go to these charts. Okay, it's time to go to these charts. Now, the first chart I got up here, I've got AMD pulled up. Now, AMD is a stock that I hold, is a stock that I believe in, stock that I'm trading right now. I think I see a double bottom right here in AMD. Now, AMD has been continuing to fall, but if you want to buy shares here, I 100% support buying shares here. If you don't want to trade it to the upside, I understand. We may want to wait. We may not want to catch the bottom from an options perspective, but from a share perspective, this is an area where you want to be accumulating shares because I know that AMD is going to continue to do well, and we need to be buying this stock on a discount. We don't need to be buying it when it gets back to 227. You want to have bought it when it's down here at 144. That's the type of stuff. That's the type of stuff that you need to be doing. Now, let's go to QQQ because this is where we started everything off. We started everything off with QQQ. Now, QQQ had a 52-week high. QQQ actually opened up at a high, had a 52-week high, all-time high on July 10th, right? On July 10th, we had that all-time high. But now the stock has came down and it's down about 7.97%. So we're down almost 8%, right? We're down almost 8%. There's a small gap right here that was filled that we came on down to. Now we're coming on down. Now we're coming down to key areas of support. We're coming down to a previous level of resistance and a previous level of support, right? Resistance turned to support. We could be coming down here, and this could be the level where the stock wants to stop. It's a possibility. Could we continue to come down? Maybe come down to 448, 449? That's a possibility. To come down 10%, that's a possibility. But this is an area right here to where we need to start looking at, okay, if you've been playing QQQ to the downside, you may want to get out of your puts, at this particular level because we're finding certain level of support because I'm telling you that we're in a bull market and I'm telling you that it's likely that we're going to eclipse this 503 again before the year is over. It's likely, in my opinion. So I think that we need to be looking for areas to go long, opportunities to go long. That is what I am particularly thinking on QQQ. Now, let's look at SPY, right? Let's look at SPY. We look at SPY on a year-to-date perspective. It's up and to the right, y'all. It's just moving up. But we've seen this happen before. We've seen SPY pull back like this before. This is not the first time SPY has pulled back this year. Back in April, we had a pullback. We had about a 2-week pullback. A 2-week pullback, we came down 5.86%. We came down 5.86%, right? So we could come down another 5.86%. That could happen. We had that pullback, then we came up, came down, retested it, and we came back and we went back up to the races. Now we're in a situation to where we're down 4.23%. We're at 4.23%. We're at the 50-day moving average. We're at a support level. We've got a small gap that we need to fill. Could we come down another? Is it possible, right? Is it possible for us to come down another 5.86%? It is possible. The market could 100% do that and take a little bit more profit. Where would that put us? That put us right around 531, which would correspond with another previous high, previous support. So what this is telling me is that we could have a little bit more downside based on what we had earlier in the year, but we're coming to some support levels and we're coming to some areas where we may want to consider buying. So, excuse me, it's a situation to where, again, we need to be looking at, okay, where are the opportunities out there in the market that we can capitalize on, that we can buy securities, that we can trade them up to the upside, because SPY is coming back up to 565. It's going to happen. And we need to put ourselves in a position to be successful because, again, we are in a bull market. Okay, what's the next stock I wanted to look at? SMH. SMH. Now, SMH has been getting beaten to sleep. SMH has been getting beaten to sleep. Now, this is a stock that's it's been going up, going up, going up. Made a recent high, but it's fallen. Now, this one has fallen more significantly because it's semiconductors, right? Semiconductors technology. These stocks are more volatile. So this one is down 14.87%. So we're in correction territory on this particular stock. If we come down 20%, we're even more significant. But you got to understand, where the stock is coming down to. The stock is coming down to a support level. We had previous resistance here in March. Okay, previous resistance in March, and it came down. Now, while I'm sitting here and while I'm looking at this, how far did it come down? Right? Okay, it came down. I'm gonna go ahead and edit these properties for you all so you all can see this, right? It came down 17.17%. It came down 17.17%. That was the correction. Okay. Now we're down 14.87%. Okay. So what if we came down 17.17%? Where would that put us? That would put us around 234. 234, which is another area of previous resistance and support. We are in the area of support on this stock. So we need to be looking at areas to go back long, because this particular name, I'm telling you, this is one that moves very, very quickly. It moves in bunches. So when it provides you an opportunity and it comes down, okay, you need to be looking at yourself and saying, okay, this stock is now coming down. I need to be finding an opportunity to get into this name, because when it gives you that opportunity, you need to be looking at it. So SMH, we know that SMH is a semiconductor, right? Okay, so what are some other semiconductor stocks that are really intriguing me right now? TSM, TSM, Taiwan Semiconductor. Taiwan Semiconductor just reported earnings. They reported pretty good earnings. And now the stock is approaching this previous high, 158.40, right? 158.04 is what I've got. Close enough. We've got a gap here. We've got a gap here that probably needs to be filled. I would feel better about it coming down and getting filled. If it came down and got filled, that would be a great area for us to be able to buy this stock, trade it back to the upside. I see a little demand zone right here around 148 that I believe is another area. I'm like, okay, this is one of those areas where we could pretty much rise up, but we have a gap between 148 and 144 down here. So this stock could continue to come down some, but this is one that you gotta have on your watch list, because the stock has an all-time high of 193.47. When we ride back up, we're going to ride back up as well. When SMH rides back up, when SPY rides back up, when QQQ rides back up, TSM is going to ride back up. I'm trying to tell you. Okay, what's another stock that really has me intrigued? AMAT, Applied Materials, another semiconductor stock. It's been falling. It's been falling significantly, but we're coming down to this area of support. It broke down 214. Well, now we're down at 205, 205.53. This is an area that we're saying, okay, this is an area of support that we need to consider buying this stock, because this stock is another one of those ones that moves in bunches. Okay. You need to have AMAT on your watch list and looking for an opportunity to get into it. Okay. What's the last one? This is the last stock I want to talk about. XLK. Ticker symbol XLK. XLK tracks the technology stocks of the S&P 500. So all of the technology stocks in the S&P 500 are in XLK. Your number one position is Microsoft. Your number two position is Nvidia. Your number three position is Apple. You've got stocks like AMD. You've got stocks like Qualcomm. You've got other cybersecurity companies in there, other, semiconductors and things of that nature. This stock is down 9.35%. It's down 9.35%, but it's coming down to areas of support. It's coming down to areas of support again, which is very similar. It is a similar story around all these particular stocks. They're coming down to certain areas of support. Well, if this stock is down what is it down? It's down 9.35%. Okay, what was it doing back? What was it doing back here in March? Because we had some highs that we couldn't break out, and the stock actually broke down. Okay, the stock broke down. Okay, how far did it come down? It came down nine. It came down. I'm gonna go ahead and so because I want you to be able to see it. It came down 9.5%. It came down 9.5%. We're now down here. We're now down 9.35%. We're we're coming down to these certain areas where we already pulled back. We already had a pullback like this earlier this year. We could just be having the second pullback that we've had this year, like this, coming down to certain areas of support that I like. This is another one of those ones that we need to be tapped into. You have Apple, you have Microsoft, you have Nvidia as a part of this ETF. When it's time for it to ride back up, it's going to eclipse this $238. Okay. And that's just what you have to understand. That's what you got to understand. You know, Nathaniel Bibbs, I see you in the comments, man. You're saying that uncertainty. You totally agree. Nathaniel Bibbs, he said, definitely love SPY and QQQ. Come to the next down gap fill, then bounce. Okay. We're looking at the same thing here. We're looking at the same thing. Nathaniel Bibbs from Market Entertainment. You all saw him on the Trade for Yourself podcast along with Nathaniel Rohn back last year in Q4. Market Entertainment. These guys know what they have going on. They understand what they're saying. They understand the market. That's what we need to understand. Continue to stay tapped into what we have going on because it's going to be very, very important in order for you to be successful. Very, very important. Now, I'm telling you, the market is coming down. We had the worst day on the Nasdaq since 2022. We were in a bear market at that time. But you have to look at it from a technical perspective and look at where opportunities are because there's some opportunities out there and we need to be tapped in and getting ready for them. I'm not saying you to go out here and just unload all of your money right now on these securities, but you need to be putting some capital to work around certain technical levels that we know respect based on certain things and certain percentages that the stock has came down just this year. Follow the trends, follow your rules, stick to your script, understand your strategy, and you're going to get to where you need to get to in order to be successful. As always, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Please like this. Please subscribe. Let me know in the comments what you think about the charts. Let me know in the comments what you think about the technical analysis that I've been doing 2 weeks in a row. 2 weeks in a row, I brought the charts out because it's important for us to understand what's going on. Remember, don't pay for it. Trade for it. I'm going to tap in with y'all in the next